All right, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Once again, Market Movers today for the 21st of March 2017. If you have a look at your webinar interface, you can see that small questions box, and please make heavy use of that box. If you have any questions throughout the course of this webinar, put them in that box. And I will, just as always, do my very best to answer those questions as we move through the webinar. Right now, I would appreciate you guys giving me a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. Perfect, Mike. Thank you very much. Thank you very much, everybody. Really appreciate it, guys. Today's session, just as usual, is scheduled to run for about half an hour. We have a little bit of extra time towards the end for some questions if you want to open the discussion there. So please don't be shy. Let me know what's going on and what do you have on your minds. Of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're okay with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only. Especially true for the live part of today's webinar. I will be showing you markets which are moving right now, which I think might give us a trading opportunity over the next few days. But however, this is just my take on the markets. I don't have a crystal ball and I could be totally wrong. So in the end, you have to own that trade that you put on. What we're giving you guys here today is really just always, as always, for educational purpose. I want to give you the opportunity to look inside my head, see what I see on those charts and those markets, and get used to my thought process. Maybe it's something that can help you with your own trading, hopefully. So please make sure you're okay with this before continuing with the webinar. And of course, just as always, we also have a further risk warning, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purpose only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indices, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. All right, that being said, let's just get started. Here's today's agenda. Pretty much the same agenda as always. We want to have a look at the markets. We want to identify potential trading opportunities. And to do that, we need to have some kind of trading strategy. I don't just want to jump into the markets and think, what could I be doing today? I could be buying, I could be selling. I don't have a clue. No, I want to have a plan. I want to have a strategy, and I want to search for those setups that fit my idea and my trading style. And once I identify those, next step is to think about how can I actually trade those markets and those setups. And then, of course, the question is which could be the proper Nadex contracts to actually place the trade. And this is pretty much what we want to do here today. Trading strategy, identifying those setups, and then looking at what might be suitable Nadex contracts to trade those setups. Well, just moving on, and live trading and analysis. And we got a question from Rod. How will the French election affect the euro? Very good question, Rod. My answer is I don't know. And personally, I don't care, because what I'm doing is I'm looking at charts for my trading style. We have to keep in mind that there are two different kinds of trading. And one is more about fundamental news and fundamental events and macroeconomical events, interest rate decisions, long-term patterns and economical flows in business, in the marketplace. This is the domain of fundamental investors. They read the crop report, they read the mining reports of the mining companies, and then they arrive at the conclusion, all right, mining is going that way. Probably gold might be spiking in price. I don't know. That's one way to trade the markets, and there are many successful investors which just do that. They trade fundamental news. However, the other approach, and this is what I'm doing for my own trading and what we're teaching you guys here, is technical analysis and technical trading. So personally, I think all the news that I need and all the information that I need to arrive at my trading decision is already located here on that chart. Because essentially, I think market prices react very, very fast to certain news events. I don't know if you had been watching the markets during the US presidential elections, and it was fascinating because the reaction of the futures prices immediately told us who has currently taken the lead. And it took about 30 more seconds for Twitter to catch up and tell me, oh, by the way, the lead in Florida goes to ABC. And just the prices have been so fast, it didn't make any sense to watch Twitter. CNN was about 2 minutes late, and as you can judge by my accent, I'm based here in Germany. German TV was about half an hour later that they said, oh, and by the way, half an hour ago, Florida took the lead candidate XYZ. And so I think if it's public news, and as soon as it's out, it's already in the price. So just looking at price on its own at the charts is giving me pretty much everything that I need to know. However, and Rod, you're absolutely right about that, there will be an effect on the euro. And do I want to have a position in the euro when the news comes out in conventional instruments like futures, like conventional forex spot positions? No, I don't want to have those positions because we can have huge volatility, markets can spike, and those huge volatility spikes can easily wipe out my position. And it doesn't matter if I got the big picture right or wrong. This volatility can do huge damage to me. But that's only true for conventional instruments. What those Nadex contracts do for you here is they limit your downside. You have a well-defined risk position the very moment you open that trade. And that means you can't lose more than the money that you have deposited to open that position, the money that has been shown in the deal ticket when you opened and raised that order. And suddenly, with the help of those contracts, those news events become tradable because I'm really able now to limit and cap my downside. And so if you want to speculate on the outcome of the French election, the way personally I would do it would be with Nadex contracts, because there I have this well-defined risk exposure. And even if we can see volatility spike in one direction or the other, those options always have a time to expiry. And as long as expiry is not there, those options are still alive and something can still happen and move in your way. So you won't get stopped out there. No need for conventional stop losses if you apply proper risk management and position sizing. And yeah, big message here is if you want to trade those news events, Nadex contracts definitely are one of the most manageable instruments to trade those types of environments and yeah, binary events. Rod, I hope that answers that question there. Let's get started here with the British pound against the Japanese yen. And what I can see here on that chart, and we're starting again with our analysis on the monthly chart, is that we have seen a huge run up here from 2012 to round about 2015 something. And after that, it was down, and it was down pretty hard. And we made clearly new lower lows and lower highs all along the way. And now at the end of 2016, we just pulled back here once again into a moving average sell zone, the area identified by the 10 and 20 period moving average. We can see that our moving averages are now perfectly in place for a downtrend. We have the 200, the 50, the 20, and the 10 period moving average. They are all well aligned. We are now sitting here in the sell zone. we saw a rather smallish bearish candle here. Although it's a green candle, it's a bearish candle. Why is it a bearish candle? Because all this move here to the upside, you can see this long upper shadow here, all this move to the upside has been rejected by the market. So this on its own could have already been a trigger candle for a potential short trade setup there. Good strong momentum here pointing to the downside. So that's the monthly chart. British pound, Japanese yen, everything here pointing really to the downside. And it supports if we want to make a bearish case on lower time frames. That's the main message that I want to see here. Big picture here on the monthly is it's pointing lower. Now, the next chart that I just want to jump to, or let's quickly have a look at the weekly. The weekly is not that clear. First thing I want to check what is the trend, and obviously we had a downtrend here, but now we made clearly a new higher high. So from that point onward, the trend is not clear. We have a lower low being followed by a higher high. Then next thing we can see is we made another higher low. So we might be switching now to uptrend mode, but in order for that uptrend to be effectively established would be that we need to see another higher high. But we didn't get that higher high. Instead, we got a lower high and prices start to pull back. And here on this weekly chart, we can already start to see that there seems to be an area here where price just is stopping now, isn't moving any further. And this area becomes much clearer and much more apparent if we have a look here on the daily chart. This is the run-up that we saw. And we pulled back, we made a lower high. And on the daily chart, we can now see that we continue to make lower highs. This is a lower high compared to that one, compared to that one. Here we had another lower high, and another lower high, and another lower high. And at the same time, and that's the level here, and let me just make this maybe a little bit more something like that. We can see the price stopped at that very same level all the time. That level first was somewhat established back here at the end of November 2016. Here we pulled back, we broke through, almost tested this level, came back, but the next precise test of this level happened here, and once again, and once again. And now we're sitting here just with another series of lower highs compressing more and more against this level. And those of you who have already attended our webinars and where we teach our two decisive trading strategies, you are probably aware that this is a perfect example here, or an almost perfect example of our momentum breakout strategy setting up. We are in a well-established downtrend on the higher time frames. We have another downtrend going on here. We have now rather small candles setting up here, very close to our sell zone. We have our candles, we have those moving averages again in the correct order, 50, 20, 10. That the 200 isn't in place isn't really worrying me that much, and we're compressing more and more against this flat level. Now, a very crucial component for this setup here, for a short setup, would be to see that both MACD and RSI show convergence. Ideally, right now, but a must-have is that we get this convergence on the potential break of this market here to the downside. And let's just have a look at what MACD and RSI are currently doing. Here we do have MACD, and let me just put on that level here, and we can see, let me make that a little bit larger. You can see that MACD pretty much is holding its ground fairly well. From this test to this test here, clearly MACD made new lower lows as well. With the recent test, we are pretty much at those same levels where we have been before. RSI, same picture, same story. So for this rather prolonged trend test of this level, this looks very strong from an indicator convergence perspective. So from a conventional trading approach here, what would be a potential trade that I could be seeing here? And I'm stalking that trade myself right now. The trade is not here, but I have something in mind. The idea would be here to potentially wait for a breakout to the downside below this level. That level that has been tested here 1, 2, 3, 4 times in the past. And once we get a breakout below this level, the idea is that then it's off to the races. We could expect, and that's the general pattern that we're searching for here, is that price will start to crumble apart and probably head towards retesting those levels here that we see here, something like 127, 126 Japanese yen per British pound. Now, does this mean, because I've listed now all those factors and the setup looks really nice on that chart, does this mean this is a sure thing? By all means, absolutely not. There is never a sure thing when it comes to trading. This is a high probability setup, which means it should work more often than not over a large sample set of trades. So what I do know from my own trading is that if I traded that setup here 100 times, I should be able to win this setup maybe in 60, maybe 55% of all cases. But that should be sufficient if I work with proper risk management and with proper stops and proper position sizing. I don't want you guys to get this idea just because this looks almost picture perfect, that this is a sure thing. There is never a sure thing with trading. All the stars could align and it could still be a losing trade. So be sure to understand that. All right, so that's the big picture that I'm seeing here. Question is, how could I be trading that setup potentially with Nadex contracts? Well, Nadex contracts have a certain time cycle and time to expiry, and I have to pick something that works for me here. And is the trade setup here right now? No, it isn't, because in the end I'm waiting for that breakout. Let me quickly move over here to my Nadex platform. And let's make it a little bit smaller, but you can still see some of the price action going on here. All right, so multiple ways that this setup could be approached, thinking that you might be wanting to trade this market potentially to the short side. First thing is, you have to decide, do you want to jump the gun right now and jump in? Chuck, you're absolutely right. Chuck is just saying the only sure thing in trading is that there is no sure thing. Perfectly understood, perfectly agreed. Thank you, Chuck, for that one. The question is, do you want to jump the gun right now and to speculate that this price might be going lower and ultimately test this level within, for example, here, let's go for the weeklies. And within those 3-day cycles, do you think you will get to see a test of this level? And by the way, this level seems to be somewhere around 138, let's say 50. Now, if you think that this is going to happen, that we will see a retest of this level, not talking about a breakout, just a retest of this level within the next 3 days, then we might be looking into, for example, selling that contract here. Not a recommendation, just an example of how this could be traded. We're looking here currently at a price of 139.70, around about 80. And I'm looking here at the Nadex contract with a strike price of 138.75. So it's still above this level here. I could be selling this contract right now for $73. This means my maximum profit, what would be the winning scenario, or what would be the scenario where this maximum profit could be locked in? Well, if this contract settle, or if price settles above the strike price at expiry on Friday, payout for this contract is $100. I just got 72.25 for that contract. I would have to settle it for 20, so my maximum loss would be $27.75 per contract. If price, however, drops down and closes there, closes below that strike price, I would be good to, it would be, I would end up being able to keep those 72.50, which I just got for selling that contract. Let me just place that order so that the numbers won't start moving around and switching over. and you can see it's there. The order has been filled. I have my position here. Again, it's just for them in demonstrational purposes. I do not suggest that you place that trade. Another possibility, if you want to trade that, and by the way, let's just sell another one here so that I end up having 2 open contracts there. And it's good to know that you don't have to wait until this option expires to close that position. You can easily trade that around that position and manage that position, just like if it was a normal option position, if it was a futures position, a normal stocks position, whatever. You can actively manage that that position. It's not fire and forget, hope and pray. You're all the time in the driver's seat. So thinking about, I could want to close that position and take at least partial profits on that trade. And I would do this here with a limit buy order. Now, the idea is I might expect to see a retest of this level here. The idea then is if an option is trading at the money, I should see a delta of round about 50. And the delta of a conventional option can be thought of pretty much as the price of a binary. So this option here is in the money. So currently the delta of that contract here should be something around 78, 79%. So that's the mid price. You can think just rule of thumb, it's just a mathematical thing. It's not precise, but as a rule of thumb for fast trading decisions, I think this helped me in the past quite a bit. So I just want to pass along that story and that idea. If I think price starts to drop lower and will retest this level of that strike price of 138.75, my assumption would be that I should be able maybe to close that contract then for around about 50 bucks, trading at the money, delta of 50, price of round about 50. So the idea here would be for me to say, okay, I want to close that position, or at least I want to take off from my 2 trades or 2 contracts that I have. I want to take off 1 contract if price drops down to 55. What I'm doing then is I'm already locking in some profits. It's just managing those positions and scaling out of positions. Would be far too advanced now to talk about that here, but definitely is one good way and active way to manage those positions once you've wrapped your head around those concepts. So I'm placing that one here, and you see it's sitting there, it's waiting, it's working, and in the end, if price drops and this level is hit within the life cycle of that option, that position overall should be pretty much risk-free. I shouldn't be able to lose anything on that trade because the potential gain I realize with that contract here would be offsetting any still available potential loss I might be seeing on the other ones. So that's just one thing here. On the other hand, let's just assume you think, no, we will still shoot up higher here and see a retest of those highs. I don't think that this is likely. It would not be my trade, but just warning you, if you think, okay, or let's just assume price starts to drop below here and comes back to a retest of this level. Always likely, always possible. Then you might be inclined to trade that short retracement by buying one of those contracts here. If you think that a retest here is likely, maybe going back here even to the 140 level, you might look at maybe buying that contract here. Again, it's the same expiry cycle. I just personally, I'm a little bit slow. I'm getting a little bit old, and I want to have some time for my trades to work out. You have always to balance the speed of the market and the time left that you see here. There's a perfectly viable chance that the market will still move sideways a little bit. We will start to see that divergence setting up, and then suddenly that what looks like a beautiful setup right now might be completely gone. So it's important to understand what is going on there and keep on monitoring that those positions and balance what we see here. If you think, yeah, that 50 period moving average might be tested, potential trade to check that would be to pick a contract which is pretty much close to to that moving average and just buy that contract. You see how easy it is to raise the opposite order. It's not just, I don't want to suggest you guys any one strike price for either shorting or going long. It's just for demonstrational purposes to show you guys what's going on there. This is the weekly chart, and we haven't seen the breakout yet. Personally, probably I would want to see the breakout first, and then I would be probably looking at some of the faster paced options, one of the shorter expiry cycles, and would then try to find something there that is moving. So I explained you guys the setup and what's going on there, and in the end, you have to see which time frame you like best for your trading, but the big picture and what I'm looking for is what we can see here on that chart, that breakout of that level here to the downside. Once again, looks promising. It doesn't have to do a thing. That's the nice thing about trading. It's all about probabilities. And yeah, so let's just keep that in mind. One more thing, or just let's stay here for a quick moment. Looking at forex spreads. Let's just assume we start to see the breakout here to the downside. What I would want to do then, looking at my spreads, and probably we won't be seeing this breakout in the life cycle here. We will have to wait for the next round of options to be available for trading for the next day. But after that, I would want to see and find, if I wanted to trade that breakout here to the downside with a spread, I want to find a spread which has the upper level, the upper range of that spread as close to my 138.50 level as possible. From those contracts available here for trading, that would be currently this contract. Why? Because the upper ceiling here is 139.10, which is pretty close, or the closest upper ceiling of all those others. Keep in mind, if you want, or if you expect the market to go down, you want to enter, or you probably want to enter as close to the ceiling as possible, because then the complete distance between the floor level and the ceiling level might be working in your favor. All this room is there to move in your favor, and only very little room is there to move against you. So keep that in mind if you want an intent to break out, trade that breakout here to the downside with a spread. Try to pick the floor, the ceiling level to be as close as possible to the level out of which we want to break out. All right, guys, I would like to close today's session, and I've talked again too much, by a very brief and quick look at our major indices. I have some issues here with my data feed for the Dow Jones futures, sorry, so nothing about the Dow Jones. However, the Nasdaq, we have seen that the Nasdaq has risen beautifully. We are overextended here on the weekly chart, and we are starting to see some bearish action now, which makes a pullback here into our moving average buy zone rather likely. And furthermore, we can see, yes, price made a new higher high here on the daily chart. But look at this beautiful divergence setting up here, higher high in price, but at the same point in time, clearly new lower high in MACD and also new lower high in RSI. This is divergence. This is a early warning sign that we might be seeing retracing prices, declining prices here, and that this new higher high really might not be that significant in the long run. We are here also very close again to test this previous low, higher low, and once this is tested and broken, the uptrend, at least on the daily chart, would be gone there. So definitely some kind of weakness in the Nasdaq, and the Nasdaq has been one of the strongest indices that we saw there for over the last few weeks. The Russell wasn't as strong, was a little. We had to be concerned about the Russell for quite some bit, and just looking at the price action here on the daily, it's a high, but it's a lower high. We made lower lows here compared to the previous lows. So clearly the Russell is in much more trouble than the Nasdaq at this point in time. Pretty volatile session here for today. Those moving averages look way weaker than what we saw in the Nasdaq. And if we switch to the S&P 500, pretty much the same picture. not as weak as the Russell, but also definitely weaker than the Nasdaq. In the Nasdaq, we saw higher highs. Here we're clearly seeing lower highs, and now another lower low being formed today. So this happy bull mode that we saw in the markets, at least for the last few weeks, might be coming now to a at least short retracement, short pause. We'll have to wait and see what's going on there. And one way, and I want to close with that, the question always is, what might be a potential level for this pullback? And a nice way to look for those levels could be to use Fibonacci retracements, and I'm picking my Fib retracements and going here on the weekly chart from the recent swing point low to the high. And I'm doing this once again from the previous one. And what I'm looking for is to see if I get some kind of clusters. And I do get a cluster here, roundabout in the S&P 500, roundabout at the 2,310 level. The 23.6% retracement is not so strong. It would be much nicer if it was the 38.2, but however, it's a retracement and it clusters here with a 50% retracement. So if I had to place a bet right now on what might be a logical place for this retracement to occur, I wouldn't be astonished to see if the S&P 500 would be trading very close to those 2,310 levels rather soon. But again, it's just a tool. It works sometimes, it doesn't work other times. You want to stack the odds in your favor by just looking at as many factors as you can see and identify here. All right, guys, that's it pretty much for today from me. Please remember, feel free to type your questions while I finish that presentation here. Yeah, I showed you how I look at the markets and what I'm seeing in the markets right now, including British pound, Japanese yen, which is one of the most interesting charts personally on my watch list right now. It's your call, it's your decision if you think, you share what I'm seeing on that chart, or if you are looking for something completely different. Remember, it's just for educational purposes, and in the end, it's your money, and therefore you have to own that trade. You have seen how easy it is, however, to place those orders and trades here at Nadex. I have explained also why trading around news events like the French elections that have been mentioned in the beginning, Nadex contracts might be just the perfect tool to trade those events, because effectively you can really precisely manage your risk and manage your downside. Very powerful features of both spreads and binary options, which I like very much about those Nadex contracts. All right, guys, many ways to get in touch with Nadex, just in case if you have any further questions. And yeah, for me, that's it pretty much for today. After this webinar, just as usual, there should be a short survey. Any feedback is really appreciated. And now, yeah, for me, it's been a pleasure. Thank you very much for attending and the great participation. And now I wish all to you a very great day. And of course, just as always, happy trading. Take care. Catch you next time. Thanks again and bye-bye.